I welcome you all to yet another super interesting session wherein we'll be discussing about a platform company, CarTrade Tech, and we'll be discussing why this platform company has a good potential over the next 3 to 5 years, wherein it can double its sales, more than double its sales in the next 3 to 5 years, and how it can ride the upcycle which will happen in auto sector. There were three companies in tech sector, e-commerce and all. So if you look at the companies which recently got listed, new age companies, Zomato, Nykaa, CarTrade Tech, PB FinTech, and many more. Most of the unicorns which happened all got listed recently. And I was having a watch on all of them. In fact, I was saying that I'm waiting for the right price value mismatch wherein we can take such session. So out of all the tech companies, new age companies, this is the only company which qualifies our criteria of fundamentals, technicals plus value plus trigger and less complex. I was looking at Zomato, I was looking at other companies, but the thing is, Zomato is too complex, and as we know that more the complexity, it becomes very difficult to take a decision on such companies. So CarTrade Tech will be discussing why, and you will also understand that it's a simple business model compared to other, which qualifies all our criteria. So let us move ahead and understand CarTrade Tech, a platform company, high growth platform company. Why I say so? So before even going forward with CarTrade Tech, we must understand industry overview. I have explained this industry overview in YouTube video Atul Auto when we were discussing about Atul Auto. We have seen past 1 decade of no volume growth in automotive segment industry, auto industry, and this is what even this slide says about. From FY15 to FY21-22, the sales has been stagnant. If you are able to see this, PV sales are stagnant for the long years, 6-7 years now. And if you look at two-wheeler segment, actually two-wheeler segment has seen a degrowth. So industry has faced headwinds over last few years, coupled with COVID, supply side constraint, and all those things. So industry has faced a tough period of 5, 6, 7 years. And I have already explained there is a case of mean reversion which can play out in auto industry, and which can, because worst for the industry seems to be over, and we can see a green shoot going ahead. And that's why when I was looking at CarTrade Tech, the primary objective looking at CarTrade Tech first was I wanted to search an opportunity in auto after looking for HJS Enterprises and Atul Auto. I wanted such a company which can grow at 20 to 25%. So CarTrade Tech fits into that criteria. Looking at this, whatever we'll be discussing. So let us move ahead. So this is the industry outlook. Indian automotive industry will become third largest automotive market by 2025. New car market will grow at a pace of 10% CAGR over the next 5 years. New two-wheeler market will grow at a pace of 8% CAGR, and used car market will grow at a pace of 11% CAGR. So this is the industry outlook which is bound to happen because of mean reversion playing out, and it is expected to become world's third largest automotive market in terms of volume. Now let us understand what is CarTrade Tech. CarTrade Tech is a multi-channel auto platform provider company with coverage and presence across vehicle types and value-added services. Company operates with brands such as Carvale, CarTrade, Shriram Auto Mall, Bike Wale, CarTrade Exchange, Adroit Auto, and AutoBiz. A platform. This platform connects new and used automobile customers, vehicle dealers, vehicle OEMs, and other businesses to buy and sell different types of vehicles. The company offers a variety of solutions across automotive transactions for buying, selling, marketing, financing, and other activities. So it's a platform company. It doesn't own its own inventory. It doesn't buy and keep the inventory at itself and then sell it and then market may make some money on that. It doesn't happen with CarTrade Tech because it's a pure play platform company. It just uh, provides a platform and it's a technological platform. That's why name of the company is CarTrade Tech. It's a technology company. So let us move forward and understand CarTrade Tech. And I'm just opened this on screener. So CarTrade Tech, current market cap of the company is 3,200 crore. Current price is 697. It made a high of 1,600 after just after the listing. It made a low of 460 just recently during Ukraine war times, and currently it is trading at 697. Book value for this company is 424, and it is trading closer to price to book. When it got listed at a price to book of 4 times, and currently it is just trading at a price to book of 1.5 times. Return on equity, return on capital employed is negative. Face value is 10. Debt to equity is 0.04. It's a debt-free company. Promoter holding is zero. There are no identifiable promoter for this company because it is held by institutions. It is a professionally managed company, just like even if you see L&T, there are no promoters. So promoter holding is zero. Interest coverage and all those things. If you see this total assets 2,200 crore, cash and cash equivalents. Actually, the cash and cash equivalents are close to 1,000 crore plus, which is not shown here because they are only showing maybe mutual fund holdings here. But cash and cash equivalents are higher than 1,000 crore. I'll be showing that. So if you just see here, it got listed at around 1,500. It made a high of 1,690. Since then, it is on a downward trajectory. And as I always say that never invest in an IPO for long term because IPOs are always mispriced. Means they are always priced at a higher range, higher valuation, and very few value is left for the retail investors or investors to participate in. And that's why I like 1 year after the IPO, 2 year after the IPO, 3 year after the IPO. This is the time when you should start researching about that company. So currently the stock is has fallen from as high as 1,600 to as low as 500, 600 levels. Currently it is trading at 697. If you look at the price to book, it got listed at a price to book of 4.1. Currently, it is trading at a price to book of 1.5. So it's a debt-free company. Let us look forward. It is the only profitable company in digital automotive platform companies. If you see, there are other companies also, but this is the only profitable company. If you just see here, they used to do a sales of 33 crore in 2016. Currently, they are doing a sales of 300 crores, which has went up 10 times in just a 6 year period. It's a high growth company. If you just see the expenses, so most of the expenses are employee cost here. In March 2022, the employee cost has went up from 52% to 106%. The reason for that was they have provided ESOPs to all the employees. So most of the employees. So which has it is one time cost like last time it happened in March 2016, and once again it is happening now in March 2022 because of ESOP. The employee cost has gone up, and as this is a professionally managed company with most of the employees owning stake, there will be ESOPs in between. But I think most of the ESOP what company had to distribute, they have distributed now, and the employee cost will fall once again towards 40 to 45% in the future. So operating profit is the only operating profit making company in tech space, as I said. So they used to do a profit of 40 crore. Currently, because of employee cost, it is like 134 crore loss, but it is a operationally profit company. If you just deduct this employee benefit, which was a one-time cost after a long time, it's a operationally profit company. So share capital 47 crores. If you just see the reserves 1900 crore and fixed assets of 1041 crore. In this fixed asset, because it is a tech company, they will not have big fixed asset, and that is the reason. If you just see, land is close to 40 crore, but intangible assets are close to 900 crore. So these intangible assets consist of goodwill and patents and all those things. So these are intangible assets, and it's a tech company. It doesn't have high fixed assets compared to other companies. So it's a platform company, and if you just see, as I said, there are no identifiable promoters here because it is held by institutions. Kuwait Investment Authority, Goldman Sachs, those put together, FIIs own around 17%, DIIs own around 6%, IIFL Special Opportunities Fund own around 1.2%, and these are other investors like Heidel Investment. They have been invested in this company since long, and they have enjoyed multi-bagger returns already since long years. So they own around 17%. 16% is owned by one more institution, and Vinay Sanghi, who is the founder of this company, who owns around 2% of this company. So it's a professionally managed company. If you just see, most of the investors are institutional investors, and there is no identifiable promoter here. So this was all about the CarTrade Tech and its numbers. Now let us move forward. So there are six types of, if you have read the book One Upon Wall Street, Peter Lynch explains six types of stocks. If you are able to differentiate the stocks, and if you are able to divide the stocks between these categories, it helps us to play the story, because the style to play slow growers and sluggards is different. The style to play stalwarts is different. Cyclical is different. Turnaround and asset play. Each case has a different style. How do you play that opportunity? And I've explained that previously also. You can go through that Peter Lynch six type of stocks. But CarTrade Tech falls under fast growers. It's a fast growing company. It's a first choice of everyone, grows at an impressive rate. And why I'm saying so? Because CarTrade Tech 3 year, next 3 to 4 year expected growth rate, which I am expecting, is around 15 to 20%. And 3 year industry growth expectation itself will fall at around 8 to 10% as per the reports which many institutions are saying. So if the industry is growing at 8 to 10%, this company will grow at a pace of 15 to 20%. And this is just conservative. What I'm expecting is very conservative, because when the industry was stagnant, this company was able to grow their sales 10 times. Just recent years, they have been able to grow at a pace of 25%. But still, my expectation is just 15 to 20%. It is better to expect less. And if the company outperforms, it's a bonus. So it's a fast growing company. So if you just see the milestones, CarTrade Tech, see, earlier name of the company was different actually. Vinay Sanghi started this company in 2009, 2010, and there was a launch of B2B and C2B auctions. This was a period when he started his digital automotive industry journey. 2012 is when they started this CarTrade and CarTrade Tech, CarTrade.com and CarTrade Exchange. 2016 was when they bought Carwale and Bikewale. 2017 was when they did an acquisition of Adroit Auto. 2018 was a period when Shriram Auto Mall, they acquired Shriram Auto Mall, and this has been the journey for CarTrade Tech, and that is the reason why they were able to grow their sales from 33 crore to as high as 300 crore recently. If you just see the service offerings, auctions for cars, marketplace for new and used cars, used vehicle ERP tools, marketplace for new and used two-wheelers, inspections and valuations, auctions for CV and others. And key investors earlier they were backed by Warburg Pincus. Seems like they have exited. They have made a profitable exit here. And Warburg Pincus is one of the company which has funded B. Vaidyanathan's IDFC first also. If you just see Warburg Pincus, and these are marquee investors. Warburg Pincus, Temasek, JP Morgan, and recently they are backed by IFL, IFL Special Opportunities Fund. So this is when, so these key market investors give you a confidence that company is on the right path. So CarTrade Tech platform, it's a platform which consists of consumer groups, two-wheelers, new cars, used cars, services. They do remarketing, retail auctions, business auctions, trading, inspection. They do franchising, car trade finance. So they are tied up with uh, the most of the financiers in the country, software services and others, electric vehicles and all. So it's a platform and it has a total revenue opportunity of $14 billion. Let us talk about that. $14 billion is the total addressable market for CarTrade Tech. If you just see here, the revenue pools for the company, vehicle transactions, $6.5 billion is the opportunity for them, 45%. After sales, 21%, $3.1. Ad spends, auto finance, auctions and remarketing. So they have a total revenue pool of $14.3 billion total addressable market which they can capture, and they are just doing 5%. So it's a huge opportunity for CarTrade Tech going forward. And if you just look at the comparison between other companies, there are companies like Car Deco, Car 20, Cars 24, Broom, and Spinny. CarTrade Tech's platform stays at number one position. If you just look at the data here, this is a Google Trends data. This is for car and this is for bike. And Car Wale has a higher popularity than Cars 24 and Car Deco, Broom and Spinny. Even in case of bikes, Bike Wale, which is owned by CarTrade Tech, has a higher popularity than Bike Deco. And I have brought that comparison here. If you can see here, I have opened the Google Trends and I have compared between Bike Wale and Bike Deco. First, I have compared between Bike Wale and Bike Deco. Blue is Bike Wale, which is owned by CarTrade Tech, and this is Bike Deco. So it shows Google Trends tells you the popularity of that search item. So if somebody is searching for bike wale, Google Trend will analyze that and it is giving you. So popularity for bike wale is 88 as against bike deco which is at 28. So it clearly says that CarTrade Tech's platforms are much higher ahead than the other platforms. Even if you look at Car Wale comparison between Car Wale and Car Deco, so Car Wale's popularity is at 86 and Car Deco's popularity is at 52. This is the search item. If you whatever we are searching on Google, this is the search item. I have just compared between these two search items, Car Wale and Car Deco. So Car Wale clearly wins here with a higher popularity, which gives us a competitive landscape between other companies and this company. So and let me tell you whatever the traffic which they are getting right now, because right now they are getting close to 33 million visits customer visits on their platform, and out of that 84% is organic, which means people are coming because of the popularity which it has gained over the years, and they have to only pay for 16% on Google ads and all digital marketing spend. 84% of the traffic is organic on this platform. So out of in Q4, they total, if you just see the, if you just compare the numbers out of 29.8, 24.7 was organic. Auction listings, it has reached highest auction listings on its platform because they carry over these auctions for cars and the automotive for other segments like even bike and all. So it has reached 1.2 million units. Now, this is one more thing which is positive. As I said, that it's a platform company, and it doesn't own inventory on its own, and it is just providing a ecosystem. It is just creating the ecosystem for the buyers and sellers so that transaction ease out happens. So they have bank partnerships with Axis Bank, HDFC Bank, ICICI, IndusInd Bank, Chola, TVS Credit, Yes Bank, IDFC First Bank, Tata Capital, Kotak, and Bajaj Finance. So anyone who wants to take an auto loan, everything is available on that platform, and it helps the ease of transaction for the customers. Interesting info, company has no identifiable promoter, and IPO was 100% OFS. As this company had a cash and cash equivalents of around 1,000 crore on its balance sheet, it never needed capital. So when it came with an IPO, it was 100% offer for sale, which means earlier existing investors got an exit in this IPO, and that was the reason market took it negatively because 100% was OFS, and the stock fell down from 1,600 to as low as 460 recently, and that is the reason why stock fell. Stock is down 57% as on today. The price which it is trading at 697, it is down 57%. At one time, it was down 68, 65% since its listing price, and currently it is down 57%. CarTrade was subscribed 35 and 45 times in QRB and institutional category, which means there was huge interest from institutions for this company, and looking at the growth opportunities ahead. Because as mutual funds and institutions own very small fraction of the total fund, means allocated small fraction of the total fund, they are least worried about the valuations. If the company is giving them the growth opportunity, they bid at higher prices. So this is what happened with CarTrade. So as I have talked, they have done recently, if you just see the recent number, they have done a revenue growth of 28% and adjusted EBITDA growth of 25%. It is the number one car and two-wheeler auto portal in India, which has 160 plus physical locations, 1.2 million auction listings, 30 million is the average unique visitors which they clocked in Q4. 84% of that was organic. They didn't run any ads and all. That such is the popularity of this platform. They reached a revenue of 4,235 million rupees, which was highest ever. And they did a EBITDA margin of 21% and adjusted PAT of 638 million, which a company which is a debt free with a strong cash balance of 10 billion rupees, which means 1,000 crore of cash balance on their balance sheet. See the numbers here, 28% revenue growth, 28% revenue growth, 25% EBITDA growth, and 16% adjusted EBITDA growth. Highest ever profits, highest ever EBITDA means 26% EBITDA margins, which were earlier 36%, but it's a high margin company. So because once you have a platform and once the popularity goes up, most of the profits which will come, most of the sales will flow down to the profits, because the incremental cost will not be huge once you become a platform company. Just like Google, just like Facebook, it's a platform company. So revenue growth 28%. So these are all the numbers. This is a key beneficiary of network effect. What is network effect? Because this becomes a moat for most of the platform companies. This becomes a moat, and more the buyers, because once the platform becomes popular, there will be more buyers, and if there are more buyers, there will be more sellers. More the buyers, more the sellers. Once again, this it becomes a virtuous cycle which keeps on increasing, and it creates a network effect. If you just see, if any new social media platform comes, if it doesn't has any user base there, it is very difficult. But once it has achieved the user base, like many people are on Facebook right now, and just because of user base, everyone starts coming on that platform. It creates a effect in itself, which becomes a big advantage for a company. So it is a key beneficiary of network effects, and this drives the revenue and profitability for this company. Negatives, key monitorables, risks, and red flags. What are they? So remuneration of top management. Recently, Mr. Vinay Sanghi has taken a salary of 5 crore, close to 5 crore, 4.5 to 5 crore, which I think is high compared to the what I think should be. But it's not a risk, but we should monitor this. The reason for that is, it is better to have a promoter. It is better to have uh, high remuneration than company siphoning out of that money. So it is better to give in salaries than to siphon out that money. So, but this is a key monitorable. We need to keep a check on it. This company is a platform company, and it usually shouldn't have a trade receivable, because the platform which it has created for buyers and sellers, usually most of the times they will be getting money upfront, and they have shown a trade receivable of 41 crore, which I think is high compared to the total sales, because most of the things will be done upfront, and 41 crore is, I think, we should keep a check on that, because in going forward, if the trade receivable goes on increasing, it can become a alarming sign, and we have to be cautious on that. So it's a key monitorable. We need to check on that. If the company's total assets are close to 1,100 crores, it's 1,050 crores approximately, and out of that, around 900 crores comes from goodwill, and it is quite possible, because they have earlier they have earlier acquired many companies, and on account of that, they will be also acquiring the patents and all, the brand value, and also all it will be having a goodwill. So goodwill is around 900 crore. If you have any other fixed asset, you can charge depreciation, but you cannot charge depreciation on goodwill. And goodwill is like it is in the air. It is an intangible asset. Any bad development on company front or platform front will erode this value. So we need to keep a check on this, because if there are any problems with the platform, if they unfortunately, if they the data leak happens from the platform, because they collect a lot of data, such kind of thing can reduce the goodwill, and we must see that, because it is a company not having much assets, and most of the assets will be from goodwill itself, even going forward. So we need to keep a check on it. General decline in individual car ownership. As on today, there are only 22 cars owned per 1,000 people, which means the car ownership is at lowest around the world, which is poised to grow. But the things like COVID and all can hamper the growth. So we must see that individual car ownership is on the upward trajectory, and that can become a negative for this company. And disruptions, failures, or breaches of technology platform, like as I said, data breach from the platform can be a negative going forward. So we must keep a check on it. Or failure of the entire platform can disrupt or disruption from any other technology, because as this is a technology company, we know that technology has high rate of change, and if a company has high rate of change, we must keep a check on it, and we must see whether they are able to mitigate the disruption or not. So this becomes a key monitorable. Failure to protect personal information and other data could damage the reputation, as I said earlier also. Failure to provide quality content on car trade, and bike wale may reduce the traffic to the sites. As it is a tech company, tech driven company, and most of the people will be looking at the content, quality content, the 3D effect which they will be giving for the car auction, car listing, and all those things. This creates a positive thing for the company, but failure to provide good quality content on their YouTube channel, on their car trade and bike wale website can hamper the growth, and it can result reduce cash flows and financial conditions. This becomes a key monitorable. Increasing competition from automotive digital platforms may adversely affect profitability. As of now, it is the best player compared to others, because we have seen that from popularity. But that we must keep a check that the popularity is going in the same direction which it was earlier also. So these are all the key monitorables which we must understand when we are looking at corporate tech opportunity. So let us go forward. As I said, that goodwill. So out of total assets, non-current assets, 89,000 lakh, which means 890 crores, is goodwill, on account of goodwill. So plant and machinery and all those account less, but this is the highest intangible asset. So we must keep a check on it, and any brand reputational damage can reduce this goodwill. So we must see that. So my take, Mr. Sangvi, who started this journey with digital automotive industry in 2010, 2011. I had also shared a video on YouTube. There is one more video on YouTube. You can go through that. Mr. Sangvi started his digital automotive industry in 2010, 2011, and still he's with the company, and still he's driving force for the company. CarTrade Tech, which is now trading at a valuation of 3,200 crore, with being a debt-free company with 1,000 crore cash on balance sheet, provides enough margin of safety, as the price is still trading below the preferential issue, just which they did 1 year back, because they did a preferential issue around 800 rupees approx, and currently it is trading at 697. And after that, sales have grown, everything has went in the right direction for the company, and the stock is still trading below that preferential preferential issue price, and stock is trading at 58% discount to its listing price, even when even the price to book value, which was trading at 4 times earlier, right now it is just trading at 1.5 times. This gives a sign of valuation comfort. CarTrade Tech was able to grow at a pace of 25% in past few years, even though the industry was flattish in past 5 years. With the auto industry cycle turning up, this company will benefit the most. This will benefit the platform company, which is already outperforming the industry growth. With operational leverage kicking in, industry cycle turning up, with having a war chest of 1,000 crore, better brand visibility, and huge traffic, this company will be able to grab market share from offline sales, as network effect will start working even better over the next 3 to 5 years. It's the matter of time. CarTrade Tech will be able to do a sales of 1,000 crore and a profit of 300 crores if everything goes in the right direction over the next 3 to 5 years. So CarTrade Tech thus is a potential wealth creator, and only time will tell how much wealth will be created is created here. So this was all about CarTrade Tech fundamental analysis. Hope you have liked it. So if you have liked it, don't forget to like, share, and subscribe to this YouTube channel. So this comes to an end for this session.